Good morning traders, welcome to the morning update. My name is Mark Owen and today is Tuesday the 10th of January. What seems like a complete eternity since I last did a morning update or Trading Tuesday for you all. It's nice to be back in the helm, and let's see what the markets are going to bring to us. We had our first couple of trades placed last Friday after non-farm payroll. After digesting the numbers, it looked like we should see some dollar strength, and we were right. Initially on the day, we saw the dollar bulls come back into the market. The jobs were slightly down at 156, although over 150 we saw that as decent. But what was more important was the hourly earnings were up and unemployment stayed under 5%. So we had a couple of good positions that were running quite well. Then we waited for the market to open on Sunday, and what we were looking for was the market to follow through and see that continued dollar buying. Well, as the market opened, we saw dollar strength initially, but to wake up on Monday morning, what we saw was that the dollar was retreating, and trying to look at why that may be. The only thing that we can sort of come up with was Donald Trump giving a general news conference on January the 11th in New York. So potentially this could be traders unwinding positions in the dollar that they'd already taken, maybe on Friday, or just longer term positions that they're unwinding until after the speech or the news conference. So that's where we are with the dollar. So we're going to be a little bit cautious, and we're going to run through the charts regarding the US dollar shortly. But what news have we got? Well, there's no real news to come out of today, and in terms of the dollar, there's nothing, I don't think, until Friday. So what we've got today was Aussie dollar retail sales. They came in lower than expected at 0.2%, seasonally adjusted. But when you dive into the numbers, there was growth in retail sales in New South Wales and Victoria, and predominantly the slump was through Western Australia and Southern Australia. So it didn't really have a great impact actually on the Australian dollar. Primarily, I guess that's more to do with the US dollar itself. And then the Chinese yuan, well, we saw that the CPI data year on year came in pretty much as forecast. So that didn't really have any impact on the Aussie dollar or Kiwi dollar overnight. Okay, so let's have a look at what we've got here on the dollar index. So the dollar index, we can see, has been operating within a nice weekly channel. It broke out of the channel and tested this level here, and what we're looking at now is price to come back and test the trend line, or in and around the 100.80 at the green buy zone. So potentially we could see more downside on the dollar, so be wary now. If you are long dollar, if you've got tight stops, we could see a retracement on this before we see the next leg up. So we're going to sit out predominantly until we see more of a correction. The way we saw it was Friday brought the bulls back in, we took out the highs, and then when we woke up on Monday morning, we're anticipating to see that this was going to push up further and go on to create new highs. What we've seen is a return in momentum. Sellers come in, and then Tuesday morning we've taken out the low of Monday and we're pushing again. So before we look for any long positions based on the dollar index, we've got to come lower or break to new highs. Okay, so pretty much the same story with euro dollar. So we were looking at this point through here where we got short. The market came down into our support zone, briefly broke through the lows. Sunday night market open, continued dollar strength, pushed down to wake up Monday morning, see buyers come into the market, close the day on a high, and then Tuesday, literally early hours of the morning, we're still pushing for dollar weakness. So this is what we're saying. We can see a return up into the 107 area, and if we do break that, we'll be going up to 108.40, 108.50. So a similar story here on the dollar yen. It's all about the retreat of the dollar, no dollar strength, and from considering that the yen was the weakest market out there, to see the yen now actually gaining some strength, and it's probably a bit of safe haven buying, because we look at gold as well. Gold's going up quite quickly as well, although we'll come on to gold shortly. You can see that the next sort of key area here for the dollar yen is around 114.20, so I'd anticipate the market to come back into this zone before we actually see any further movement. So there'll be no trading on dollar yen until 114.20 for myself, and then we'll be looking to see if we're going to see a resumption of dollar strength, or we're going to see a further sell-off. Sterling, well, it looks like there's only one way for sterling currently, with Brexit looking like it's going to be a hard Brexit. Theresa May has accepted leaving the single market, which all the Brexiteers will be happy about. This is something that we all voted for, or predominantly, but it is having an effect on our currency. We are getting devalued and it is coming down. The question is, how much lower will it go? Well, obviously we don't have a crystal ball, but if we do break 1.21 underneath that green zone, then we could see further downside to 1.2, and then that would be the critical level underneath this spike low here. If we get a close below there, then probably parity is going to be on the cards. So I think at any time through here, the value in this market is definitely to the upside. So strategic ways of trading this can be through ETFs. It could be long-term positions where you're taking a futures contract, because how low is sterling going to go against the US dollar? These will be long-term plays, so this will be something I'll be looking at. I do believe we're going to see a lower, we're going to see sterling go a lot lower over coming weeks, months, but then the return is definitely to the upside. This will come good, but again, timing is always a question when it comes to trading, so don't go into rush into any long trades by any means. That's not what I'm saying. I'm just saying we need to watch our commitment of traders, looking out for when the commercials are actively buying, and we can see huge increase in long contracts, and that would be a perfect time for us to overlap our technicals and look to get long sterling. So here we are with gold. Our protege team, we do run through a lot of seasonal plays and different seasonal tendencies. Precious metals are one of those right now. January is an extraordinary month for platinum and palladium. It's also very good for gold, but it's also finding the technical levels, and you can see that there's a lovely technical level here. Trend line, break, retest. Unfortunately for me, it did come while I was away. When I'm on holiday, it's not something I tend to look at the charts because I don't like to make mistakes, and it looks like it was unfortunate because last year we had a great trade through gold at the beginning of the year, which did return us just over 18%, all this big chunk here, and it looks like we could be doing something similar. So whether it's going to return 18% or not, I very much doubt, but it looks like it's going to run up to around $1,200, $1,212 before we see the brakes applied. So guys, it's been great to come back and speaking to you. We have got one more chart to look at, but if there are any questions about any of the information that myself, Tom, or Nishal gives out in any of these videos, please drop us a comment, drop us an email to info@phoenixblue.co.uk. We do host events throughout the country. If you would like to come and meet us in the offices, by all means drop us an email, and it'd be great to meet new faces, new traders, and we'll look at working with you over this coming year, because we do believe it's going to be a fantastic year for trading. Final chart is cocoa. This is a signal we've taken from our commitment of traders. We've got stops under 2100, the big number, and we're looking at running this up in and around the 2800s. It'll give us a 6.5 to 1 return. If it plays out, we'll use our trade management technique to keep us in the trade whilst we can hopefully accommodate any sort of fluctuations in market price. We do have different trade management techniques for different signals, so this will be one of the more forgiving trade management techniques. Okay, so to finish with today, it will be trade with caution. Remember, we've got the news conference from Donald Trump tomorrow, and we've got the inauguration of Donald Trump on the 20th of January. which is only just around the corner. So be careful, trade at reduced risk, wait for market liquidity to get back to normal. I don't believe it's quite there yet. And that's it. We'll see you bright and early tomorrow morning. Okay guys, take care, bye bye.